Hey, Larry, who are your retail customers? I'm trying to get a little bit of an idea about how people are doing. Are these very wealthy individuals who are putting more money to work because they have more money during all of this time? Are these, average people who happen to have more cash because of things that have come their way, being stimulus checks or other things? It's surprising to see this much growth in your assets under management at a time when you know you're dealing with very high unemployment and people concerned about so many things, too.
Well, I think I mentioned this at the end of the second quarter on the show. We are seeing a record amount of retail participation in the marketplace. You report a lot about Robinhood and the day traders, but across the board, the average investor is putting more and more money to work, which is a good outcome. I do believe that pandemic actually has created that fear of the future, and a response is a higher savings rates in America, a higher investment rate for the long term. So we're seeing across the board, not only in America, but in Asia and in Europe, we're seeing a record amount for us of inflows from across the board from retail investors, from the open architecture platforms of the large wirehouses to the RIA channels that are growing quite rapidly in the United States. And in Europe, I would have always said the Europeans have been less oriented towards equities over the last 20 years. And we're seeing more equity investments also in Europe across the board. And that reflects for us, one of the most important statistics for us is we had $48 billion of active inflows, of which, very different than the industry, we had $10 billion of active inflows in our equity platform, too. So it was across the board.
You know, Larry, we have seen the markets perform so well, all of the major averages continuing to sit very near their 52-week highs. Transport's at an all-time high once again. You're somebody who knows these markets well. You've followed them for decades and decades. What concerns you? What do you see coming? What's your feeling right now?
I would tell you, actually, I'm not that concerned. I think it's more the same. Our central bank has identified that they are going to keep rates lower for longer. I believe we will have some form of fiscal stimulus, whether it occurs this month or in January. I believe the Europeans are refocusing on another fiscal stimulus, and their central bank is very aggressive, too. With interest rates as low as they are, we're seeing more and more investors focusing on where do they put their money, how do they orient their whole portfolio to meet their long-term needs. And so we have a strong conviction that the average investor still is underinvested, and they're going to have to be putting more and more money to work over the coming months and maybe even years. So I believe we still have more to go on the upside, even in front of probably rising infection rates with COVID-19. Fortunately, of the rising infection rates, we are actually seeing less hospitalization, too.
Yeah. Shepard Smith here. Thanks for watching CNBC on YouTube.